It's Sunday the 4th of July 2021. B2Gold is a stock that I currently hold in my portfolio and one that I've been adding to in the last few weeks. I think the stock is trading near 52-week lows, and I think that's probably a bit unjustified for the position they're in. So I'm just going to talk about why I've been buying some more stock and why I think it's still a quality company. First off, I've highlighted here proven track record. This is something that's said by a lot of companies in the industry, but the quality of management of B2 is in the top tier of sort of the mid to large cap gold miners. The original company, which was effectively B2Gold, was bought out by Kinross about in the late 2000s, I think, and then B2Gold was started. And they've been able to operate in countries that have been pretty difficult and I guess frontier sort of countries for Western mining companies, like Russia in the late 90s, and even where they're in their operations now in Namibia, Philippines and Mali. Namibia is a pretty good jurisdiction, but Philippines and Mali do have their issues for other companies, but B2Gold seem to be able to operate in these places without significant issue. They do have a couple of problems in Mali at the moment, which I'll talk about. But in general, they've shown their ability to manage political risk. And I've said that before, if you're going to have operations in these countries, you really need to have that next tier sort of caliber of management to manage that risk. So 5-year average production profile over the next 5 years is 930,000 ounces. And that's pretty stable in the next 3, this year and the next 2 years, dropping away in 2024. I think some of the issues for the market that the market has with the stock are about that sort of production growth. There's not really any growth in the near term. Their development assets are quite large, capex, and a bit marginal at this point, which I'll talk about as well. So that's I think a problem in the market. But from my perspective, actually holding 3 quality assets and having stable production is better than a lot of companies in the industry. We've seen companies in Australia, for example, having that sort of rising cost profile and having production sort of declining as well. Companies like Regis or St. Barbara. I think that's important to really, to at least to have stable production and costs. And I think they're likely that the cost profile remains fairly stable over the next few years for B2, but they haven't given guidance on that, I don't think. They've also tend to be fairly conservative. They tend to be sort of a under promise, over deliver kind of company. And you can see here they've got this production profile does not include any production potential for Menankoto, which is a permit from their Fekola mine, which I'll mention, and from some of the other items in their portfolio as well. So I think, as I said, I think there's a tendency to sort of under promise and over deliver. So I'm hoping that can be the case again. My main basis for investing in this company is proven management with a good track record and ability to generate lots of free cash flow. So they're all in sustaining costs for 2021. This is the full year, the calendar year 2021. All in sustaining cost, 870 to 910. So they're probably, again, in that lowest quartile, roughly. Maybe not the lowest quartile nowadays, but it's getting close to they're in the bottom third of production costs in the industry. So good costs. I like to have companies with generally in that at least the lower half of the cost curve. And that really does translate into free cash flow. And sometimes you see companies with low all-in sustaining costs, but you never see the cash balance never seems to build. Dividends don't get paid out. So then you're kind of wondering, well, why am I investing in something with low costs if it's not actually bearing any fruit for me as an investor? But this company really does. It comes to the bottom line, the cash balance. So expecting to generate $630 million in cash flows from operating activities this year. Majority of that is back-end weighted into the second half of the calendar year because they're doing more development work, I think, in the first half. And if you look at this is a previous presentation. This last year in the 2020 calendar year, they generated over $500 million that went into the net cash balance. So that's incredible cash generation. Another 30 million in the first quarter of 2021. But as I said, that's also, they're going to be ramping that up toward the end. So by the end of the year, potentially they have that sort of, $700-800 million in cash, net cash. This is US dollars as well. So considerable ability, proven ability to generate cash there, even when the gold price was not doing as well, still generating, $200 million a year plus for those sort of 17, 18, 19. And then obviously with the gold price change last year, it really goes into overdrive. So I guess going back to that slide about their production growth, I think one of the issues the company's had is it's not an issue necessarily, but they've been conservative in their outlook for new projects and haven't wanted to overpay for any other assets. There was talk a while back that they might have been a potential acquirer of West African Resources, for example, and they didn't do that transaction. Looking back, it probably, West African Resources eventually actually bought the Toega permit from B2 and are doing the project, which I thought could have been done by B2. They could have done that. They could have bought Sanbrado and mixed it with Toega and had a decent, 200,000 ounce asset in Burkina Faso. I'm not sure why that never happened, and it probably would have filled some of this dip in the production profile and the growth outlook that the market sees in B2 stock. But, in general, I think it's been a good course of action to not be too aggressive in the market. A lot of these development projects have had issues. West African Resources probably an exception in that ability to show that the asset is that really sort of top quality asset that can produce a lot of free cash flow. But in general, I think that the mid-tier companies have been right to not really go after these development assets too hard, because the reality of when they're brought into production, often they have issues. So it's sort of that balancing act between being too aggressive and paying up for something that doesn't deliver, and also being too conservative where you've got that a lot of cash and people start to think you're a bit lazy. But the other thing is they're paying a 4-cent dividend quarterly, US dollars that is, which is almost at about a 4% yield at the moment, one of the highest in the industry. So very good there. This is a production profile for this year. I said Q1, 220,000 ounces. That came in above their budget. And as I said there, most of the production's back weighted, more development work happening in the first half. So, I'm not sure if that presents an opportunity. I guess we'll see the Q2 quarterly in the next couple of weeks. But I think this represents a pretty good opportunity to buy into the stock. See there, as I said, $513 million in cash on the balance sheet, and then I've got a $600 million debt facility if they choose to do any corporate action. I think also that this company potentially has that might be a takeover target. The Fekola asset is one of the best in the industry at the moment. 500 to 600,000 ounces of production. This is a true tier one asset. The term tier one gets thrown around a lot, but if you're producing 500,000 ounces plus from a single asset, and showing that real free cash flow generation with all-in sustaining costs kind of in that $700 mark, that is a true tier one asset. Maybe mine life not quite at a tier one level, but I think they've shown an ability to really keep adding ounces, and there's a lot of exploration potential in the area to add incremental ounces. As I said there, they're one of the highest dividends in the industry at the moment, and they're seeing that being maintained for the foreseeable future. I talked about sort of the profile of managing political risk, and I think a lot of companies get awards, but this company seems to it's real. This is not just a one-off. That they've got a history of receiving awards in the different countries they operate, and sustainability and all this sort of stuff. They've sort of seem to be one of the leaders in this part of the industry, and this is becoming more and more important as I see this focus on ESG. That's something very important in the industry these days, particularly for sort of index funds and these sort of things to get involved in. So it's going to be something to focus on more for other companies, but B2 have been doing it for their considerable future. I talked about the sort of declining production profile. Gramalote is a project which they have in Colombia. They've had this project for many years. They just have been updating the feasibility study. That disappointed the market, I think, when that came out a few months ago. You can see here the feasibility study actually went backwards from the previous preliminary economic assessment that was done last year. So CapEx is pretty high here. They only own 50% of this in joint venture with Anglo Gold. So they're looking at doing more feasibility work and trying to get this project working. But I mean, it's not a failure when a feasibility study doesn't work. If you've got core assets that are delivering good production, good cash flow for shareholders, good dividends, it's not as much of an issue for me if your feasibility study doesn't work. And they have got optionality with such a large cash balance. The other thing I didn't mention was their ability to construct projects is, some companies or most companies in the industry don't have the ability to really drive down costs with their own construction teams and expertise in managing design and construction. These guys have got that ability and they've kept that team together in various places where they've built mines. So you can see they're trying to do more optimization work at Gramalote, but that's not due till next year. And I think that's mainly to try and drive down the CapEx. But it's probably a marginal project given that large CapEx bill that's going to come with it. But they're really trying to milk whatever's in their portfolio for now before going after any other assets. But I think maybe they probably could have been a little bit more aggressive. But I trust the management team here that they've got a proven track record. The other asset in their portfolio, untapped, is this Kiaka project, which is pretty close by to Sanbrado for West African Resources, but it's a high tonnage, low grade project. This has been sitting in their portfolio for sort of 8 or 9 years, I think, as well. But they're now looking at redoing the feasibility study there based on some updated power options, I think solar and also LNG as well, and looking at a 12 million ton processing operation. So would be a big operation. But again, I sort of think if it's been sitting in your portfolio for so long, you kind of wonder if it's going to be a really stellar return. But it's probably going to be another project that's kind of marginal. But still, they do need to look at whatever they've got in the portfolio first before looking at alternatives elsewhere. And then there's also some grassroots exploration into some pretty interesting countries. Particularly, I saw this Uzbekistan, and I saw an interview with, or maybe it was on one of the quarterlies, where they asked the exploration team what they're most excited about in the portfolio of B2, and they were talking about Uzbekistan. They've acquired some land next to this Murantu mine, which has got 150 million ounces in resources, one of the largest deposits in the world, I think. So, this is all early stage stuff, but and in particular also Fekola, the areas around Fekola, a lot of drilling going on there and adding incremental ounces. So one of the deposits near Fekola just is not in the production guidance, but they're looking at mining some inferred resources there, potential to add up to 25,000 ounces in nearby production with some soft ore going through the Fekola mill. This, I guess, has been one of the issues recently. There was a dispute around a permit north of Fekola where B2 had been looking to add production. They've got about 760,000 ounces here. Most of it sitting in this permit that was under renewal. The government refused their renewal. You can see here, and this has been going on for a few months. They were refused the renewal of the permit. And then there was also the coup in Mali as well, which happened just after B2 might have been, the permit might have been given back to B2. It's a bit unclear, but now they've commenced arbitration proceedings against the government to try and get back this permit. I don't think this is a major issue. Probably it comes down to some technicalities here. This is being managed sort of in an external arbitration committee, so it's not something that's great to see, but I think it's probably a short-term issue, and this isn't the bulk of the deposit or anything. This is only a satellite permit, which wasn't really in the mine plan to start with, so it's a little bit of an issue, but I don't think it's a major issue in terms of the government's going to take away the mine or anything. They have been, got many awards from the Malian government about being one of the best operators in the country, and they're a high taxpayer and all this sort of stuff. So I don't think it's foreboding any bad bad catastrophic issues, but it's not great to see, and the market probably hasn't liked that too much. But I'm not sure what the timeline is to get that renewed, but the company seems pretty confident that they are entitled to this permit north of Fekola. So Fekola, I talked about it, it's one of the best assets in the world right now in the gold industry. 8 million tons an annum mill and 550,000 ounces expected. And they've been able to, every time they've been upgrading this, they've found more ore. The district is just, really world class. So, I wouldn't be surprised if they can find more ore here. Whether they expand the mill again, I'm not sure, but the mine life here is not an issue, and costs are really world class as well. So that's the real key asset here. It is in Mali. The government owns 20% of the asset as well, which is another reason why I don't think they're inclined to take it away. I think that's something that's overlooked by people who really focus on sovereign risk, is that in a lot of these West African countries, the government is incentivized to have these operations spinning well, making good cash flow, not only for the companies, but also for the government when they get their dividend payments. So I don't think it's a major issue that they're having that permit issue. So that's why I'm still interested in Fekola, in B2. I think a lot of these companies that have had, the share price is down probably close to 40 to 45% since the highs of August last year. I've been buying in. This is the US dollar instrument. It also trades on the Toronto exchange. I've been buying in, and probably in that kind of $5 equivalent range, which probably equates to that sort of low sixes on the Canadian issue. The stock's come off, and I bought a couple more parcels in the last 2 weeks. So most of the companies that have had issues with a share price down kind of 50%, I found that they've been more production related, or they've done a bad transaction. I'm thinking companies like Regis and St. Barbara here. But B2, despite it does have that declining production profile, or at least a flat to potentially a little bit declining over the next few years, but they don't have any catastrophic issues at their operations and have shown an ability to produce a lot of free cash. So while their operations I like to have production growth, but it's not a major thing. But at the moment, I think the stock's been beaten down a little bit unfairly given the amount of cash they're generating, the dividend. So it's kind of a value play here, and almost a backing of the management team. So that's why I'm buying here. I think it represents a really good opportunity to add sort of good mid to large cap exposure with quality operations. Takeover potential a little bit maybe there. I'm sure a lot of big companies in the old gold industry would like to get their hands on Fekola, one of the few assets probably of that quality that doesn't sit within a major, within a sort of a Newmont or Newcrest or Barrick, or one of these sort of companies. So don't know if that's likely, especially given some of the issues in Mali. Probably a few companies are not keen to buy projects there, but I still think this quality company, quality management, and at a low price, it's one that I think I can sort of buy and just put it in the bottom drawer, and it eventually will come good, and the gold price will hopefully turn around a little bit, and the shares will rise. So I think this is kind of short-term related, but quality here. I want to buy quality when it's on sale. Thanks very much.